During yesterday's trade, you can see we took our trade ID at this exact low, which happened to be the low before price then made this pullback, and we were able to sell our position at the exact high of this pullback for over 100 points on the Dow Jones before price then continued to seek lower prices. But the question remains, how was I able to catch this exact low and sell at this exact high? And how did I know that price was going to pull back at this exact moment and not continue lower? Well, let's go into our trading journal and see how I was able to not only call the markets before this trade idea, but the reasoning for why and how I took this trade and how you guys can trade the total swoop effectively. If you guys want access to the same trading journal that I use with all the features including a full day trading routine, full trading journal with tracking metrics like R multiple and win rate, a full backtesting guide, psychology, additional ICT education taught nowhere else, and a full guide to creating and developing your own trading model, guys, this is the complete trading journal that you need. Stop paying a monthly fee for your trading journals. Use the Spark Trading Journal to help build progress and become more profitable. Click the link in the description and get your copy today. Thank you. So we're looking here on the Dow Jones on the 4-hour time frames, and the first things I want to take note of is obviously our draw on liquidity. Is there any points of liquidity that the marketplace could potentially see? And obviously we do have these previous daily lows, as well as we do have this August 29th low, as well as a frame of reference of 2 points of liquidity the marketplace can come down into. As well as I do want to take note of an SMT divergence that we did have up here. So as you can see on the Dow Jones, it failed to take out this previous high, which was this Friday, August 30th high at 2 p.m. Yet if we look on the S&P 500, it did take out this same high right here, took out this high, that August 30th high at 2 p.m. And on the NASDAQ, that same high, August 30th at 2 p.m., NASDAQ also took out that same high. So obviously the Dow Jones, NASDAQ, and S&P, they're all correlated in some way. And when we have one market taking out a previous high, yet another market does not take out that same high, then that is a divergence inside the marketplace. And since we failed to take out this previous high, then we were anticipating a potential harsh move to the downside, as well as we do have this long wick inside the marketplace. When we have long wicks inside the marketplace, these are known as rejection blocks, and price tends to come back down into these long wicks to either reach down into the long wicks and then push back higher, or in most cases, price will come down into the long wick to fill it in and potentially continue even lower. So obviously long wicks inside the marketplace are areas of draw on liquidity that I like the marketplace to come down and see. So now coming down to the 1-hour time frames, let's see what more information can we get. So the first thing that catches my eye is obviously this mitigation block. So we have this high, low, lower high point, and then as we break through this previous low point, price should then come back into this previous low point to then offer resistance for a continuation to the downside. So it looks something like this. We have a high, low, lower high, which was a failure swing, and as we break through this previous low, we should come back into the same low point for an overall continuation to the downside. So we want to put a rectangle right here, as well as we want to refer to this as our mitigation block on the 1-hour time frames. And inside of that mitigation block, we have this bearish inefficiency in the form of this bearish fair value gap. So this separation from right here all the way back up here, this is our bearish fair value gap. And what we can do here is we can actually split this up into quadrants, and we get that opening price of that bearish fair value gap. Then we get the 25% right here, then the 50%, then the 75%, and all the way back up here to the high of the fair value gap. And these are just some of the coordinates. If you guys want a screenshot, then you can. 50, 25, and 75%. So I wanted to see price come into this 25% of this fair value gap, as this is technically my sweet spot when it comes to trading fair value gaps. So I wanted to see price reach back into this level to then see a continuation to the downside, to then reach down into this rejection block and potentially continue even lower back below this August 29th low. So we're down here on the 15 minutes time frame, and we can obviously identify that 25% of this bearish fair value gap, which is also in alignment with this volume imbalance right here. So as you can see, the separation, there was no bodies closing between the separation. So this little separation here is our volume imbalance between this high and the other high just below that. So we're in alignment with that volume imbalance inside of that 25% of this bearish fair value gap. So I want to see price reach back into this 25% level to then offer resistance to reach back lower into this rejection block. So this is how you frame a bias inside the marketplace, marking out your points of interest and then marking out areas of liquidity to where you anticipate the marketplace to then see. Right, our points of interest was obviously this resistance level by this mitigation block, fair value gap, and this volume imbalance here. So this is a clear area of resistance, and some draw on liquidity that we have is obviously this rejection block, and we have these previous lows below us. So we have a point to where we can see resistance inside the marketplace, and then we have a point to where the marketplace can then see, right? And we want to then create if-then scenarios after that. So if price comes into this level and then gives me the type of rejection that I want, then I want to then take a short to then reach back down into these levels. Once you guys truly understand the marketplace and continue to put in effort, daily bias then becomes effortless. But in the beginning, you guys may struggle with daily bias. This is why it's important to continue learning and continue getting better. I wasn't always the best at daily bias, but it was one of the things that I lacked in my trading, and I made sure to work every single day towards it. And that's how you guys should be with it as well. So let's see what happens next. Price since open up at 930. And then we see this big drop to the downside. Price unfortunately did not get to that 25% level, so my limit order never ended up getting tagged, but that's okay, right? If you guys are in a situation to where you guys didn't get your entry, the last thing that you guys want to do is try and chase the markets, right? It's important to be patient and wait for another opportunity. I wanted to see 10 a.m. open up here, right? This 10 a.m. candlestick to open up and give a retracement back inside of this order block level before coming lower. But unfortunately, it didn't do that. 10 a.m. simply opened up and continued lower, so I did not get my opportunity on the second try, but that's okay. There's always more room inside the marketplace, right? We're trading between 9:30 to 11:30, and right now it's only 10 a.m. So we have another hour 30 to potentially look for some type of opportunity. And this is when I caught that trade opportunity. So we can see this low here, which was this August 29th low, which we just took out. I want to refer back to the S&P 500 and the NASDAQ at this exact low. So if we look at the S&P 500, the S&P 500 already took out that low last week. So last Friday, it already took out that low. So we already seen the S&P 500 took out this low. And then we see the NASDAQ also take out this low at the exact moment as well. So obviously we have the S&P 500 and the NASDAQ already taking out that low, and the Dow Jones is just now taking out that low. So this is what we refer to as a sick sister. So essentially it's when we have correlated markets, one market takes out this previous low, the other market takes out that previous low, and then this market has yet to take out this low. So obviously we see the S&P and the NASDAQ took out that low, but the Dow Jones had yet to take out that low. So as the Dow Jones now takes out this low, it's in alignment with the other markets. I do want to pay attention to the dollar, because at that exact moment, we can see that the dollar was starting to make lower prices based off of this order block level. So we talked about how the Dow Jones and the DXY were inverse, where if the Dow Jones is going higher, then we'd want to anticipate the dollar to then go lower, or if the Dow Jones is going lower, we want to anticipate the dollar to then go higher. So obviously we reacted off of this bearish order block level, given this rejection on the dollar, which was a pretty good case scenario for if we were anticipating a pullback on the Dow Jones using that inward market analysis through the dollar. So essentially I'm looking back here on the Dow Jones, and we have that August 29th low. We just talked about that sick sister, plus we just talked about the dollar starting to make an effort to push lower for that pullback on the dollar after it reacted off of that bearish zone. This exact low, we took our long entry, stop loss below this low for about a 50-point stop loss, targeting back higher prices for over 100 points on the Dow Jones for a turtle soup entry. Right, not only did we have the dollar starting to push lower, but we were in the sick sister where the Dow Jones finally took out this low, which is now in alignment with the NASDAQ and the S&P 500, and we are in a position to where we are oversold. So as you can see, the marketplace saw a massive drop to the downside for over 370 points. We're in a position here to where we're potentially oversold inside the marketplace, and we have to see some type of bounce inside the marketplace from this lower level. And what better area than after we took out this low? Well, essentially our objective was to take out this low, because the S&P and the NASDAQ had already took out this low. So the fact that the Dow Jones had yet to take out this low, meaning that it was going to reach down there and take it out. Once Dow Jones takes out this low, then its objective is done. So after price then takes out this low and it's now in a line with the S&P and the Nasdaq taking out those lows, then we could see the pullback inside the marketplace because it's finally met its objective that it was going to take out this low. Plus we're in a position to where we were oversold. Plus we're in a position to where the dollar was starting to push lower, meaning this was the best case scenario to then take a long back below this previous low. Right, you don't want to long or short above or below any old low. You want to have additional context and multiple points of context at that specific level as to why you should be buying or selling above or below that previous low. And we took our entry here, stop loss back below this previous low, targeting back higher prices for over 100 points on the Dow Jones. And we can see price comes down into our entry right here, and we have this low as a rejection block. So this is a rejection block right here between the opening price right here and the low of this wick. And we can see the marketplace reaches down into that rejection block once, twice, and then we finally see that push to the upside, reaching back higher prices. So essentially it is in alignment with this bearish inefficiency in the form of this 15-minute bearish fair value gap, 50%. So we came back into this bearish fair value gap. We then took our position off for over 100 points, and as you can see, the marketplace then drops lower and never comes back into our entry. So we not only got the perfect long opportunity at the lows, but we ended up selling at the exact high of this pullback before the marketplace could then seek lower prices again. So I hope you guys got a lot of value from this video. Obviously this is a little bit more advanced, right, for some of the newer guys, but I promise you, if you guys do use the journal and you guys do put in that effort on a day-by-day basis, this is going to be a lot easier than you think, right? Framing the daily bias comes from repetition and seeing the marketplace on a day-by-day basis. When you're using the journal and you're framing that pre-market analysis and you're framing your daily bias, and then as the marketplace trades, you're actively looking at the markets, actively looking at the charts and framing a setup. And then after the market's done, you're then journaling it and seeing where you could get better. This is the best way to learn as a trader, is through the journaling process. And if you guys want that journal, it's going to be the link in the description. So make sure you guys get your copy and put in the work and put in the effort to get better, because once you learn trading and get over that learning curve and start getting profitable, this is a skill set that you have for the rest of your life. So make sure you guys make that investment into yourselves and continue to learn and improve on a day-by-day basis. So that's going to be it. I hope this video was very insightful. Make sure you guys hit that like, subscribe, and comment what you guys want to see next. And if you guys want to join Spark Trading University, that's me and my brother Spec Trade's private mentorship. That's going to be a first link in the description. I'm Arkham. Be safe.